Welcome to Magic Minutes by MGIC, mortgage industry training that helps you expand your knowledge and skills. Before we get started, take a moment to review our legal disclaimer. MGIC is providing this as general information based on current industry guidelines at the time of this recording. It is always advised that you seek the guidance of your own compliance and regulatory departments.
Hello, and welcome to our series on analyzing self-employed income. I'm Sandra Sweeney, Senior Customer Trainer and Program Designer for MGIC. In this short tutorial, we'll start broadening our understanding of our self-employed borrowers by exploring various business structures. We'll define the various business structures, discover what tax forms are used by the different businesses to report income or loss, and detail how the money flows from the business tax returns to the borrower's personal tax returns. So, let's get started. We'll start by discussing why understanding different business structures is important. Since most of us who work in the mortgage industry are not accountants, business structures can be very confusing. Why is this knowledge important? Understanding the legal structure of a business helps you to understand the extent of the owner's liability, the degree of their involvement in the business, and therefore the risk that is involved. It will also help you to understand how the business reports income or loss to the IRS, how the taxes are paid, and the ability of the business to accumulate capital. For our discussion of today, let's start with the most commonly encountered business entities. The 5 business structures that we will be exploring further are the sole proprietorship, the partnership, the S corporation, the corporation, and the limited liability company. Understanding these structures will assist you in your communication with your borrower. It will also help you to determine how to document the file and how business income should be analyzed and calculated. Beginning with the sole proprietorship. The sole proprietorship is an unincorporated business with one owner. It is the simplest but riskiest type of business. The owner has unlimited liability for any debts incurred by the business. The business pays no taxes on his income. All of the taxes are paid by the owner, who is taxed at the individual tax rate. Let's take a look at the IRS forms used to report income by the sole proprietorship. The sole proprietorship reports income, expenses, and taxable profits on Schedule C, which is part of the borrower's 1040's personal tax return. Like a lot of IRS forms, the Schedule C is a profit and loss statement. There is an income section and an expense section, and ultimately a bottom line net profit or loss. Some other areas that I will call out are on page 2, line 44A. If the business owner has one business vehicle, then business miles will be reported here. Expenses where there's no designated or assigned lines will be itemized in Part 5, and then they will flow into line 27A. If the business owner has more than one work vehicle, then they will need to file IRS Form 4562. The business miles for a fleet of vehicles will be reported on IRS Form 4562 on line 30. In that case, you will need to add up all of the business miles reflected here for each vehicle. We will talk more about the calculation of mileage depreciation in an upcoming video. How does the money flow for a sole proprietor? The net profits or losses will be reported on Schedule C of the borrower's individual tax returns or 1040s. Then that figure will transfer onto Schedule 1 of the 1040s, which will then be reflected on page 1, line 8, along with all the other income reported on Schedule 1. Turning now to the partnership. A partnership is a business arrangement between 2 or more people called partners. The partnership will operate the business according to a partnership agreement. General partners have unlimited liability for the debts of the business. The partnership is considered to be a pass-through entity, meaning that the business will not pay the taxes. The borrower share of the income will be taxed at the tax rates that apply to the individual. Each partner is required to report to the IRS their earnings regardless of whether or not they have received a distribution of income. It should be noted that generally income can only be considered for mortgage qualification purposes if it was distributed to the borrower or if the business has adequate liquidity to support the withdrawal of earnings. Partners are not considered by the IRS to be employees, but they may receive guaranteed payments. The partnership will report their profit or losses on IRS Form 1065. Each partner's share of the profit will be reported on Schedule K1. The ownership interest for your borrower can be found in Section 2, Line J, capital at the end of the year. How does the money flow through the tax forms? The partnership will report their income or loss on IRS Form 1065. The partner's share of the income will then be reflected on Schedule K1. This income will be added onto all the other income that is reported on Schedule E, page 2 of the individual 1040s. Schedule E income will then be reflected on Schedule 1 of the 1040s, and the bottom line income will transfer to page 1, line 8. Moving on to the S corporation. An S corporation is a legal entity that has limited number of stockholders. The stockholders are not personally liable for the debts of the corporation. An S corporation is a pass-through entity. The business does not pay the taxes. The borrower share of the income will be taxed at the tax rates that apply to the individual. Earnings will be reported to the IRS regardless of whether or not the income was distributed to the stockholder. Generally, income can only be considered for mortgage qualification if it was distributed to the borrower or if the business has adequate liquidity to support the withdrawal of earnings. In the case of an S corp, the borrower can be considered by the IRS to be an employee of the corporation and may receive W-2 wages. What IRS forms can you expect to see for an S corp? The S corporation will file business tax returns using IRS Form 1120-S. The shareholder share of the earnings will be reported on Schedule K1. Your borrower's ownership interest can be found in Part 2, Line G. How does the money flow through the tax forms? The net profit or loss for an S corp will be reported on IRS Form 1120-S. Then the stockholders' portion will be reflected on Schedule K1. This income will then be included on the 1040s Schedule E, page 2, and travel on to Schedule 1 of the 1040s. Ultimately, the income will be reported on page 1, line 8. Next, we'll talk about the corporation. The corporation, sometimes called a regular corporation or a C corp, is very different than the other business entities. It is a legal entity that exists separate from its owners who are shareholders. The owners are not personally responsible for the debts of the corporation. Losses are limited to the amount of their investment in company stock. The business pays the taxes for the business profit, and the shareholder will pay taxes on their personal earnings. Generally, for mortgage qualification, the borrower should have 100% ownership interest in order to use cash flowing income from the business. Taking a look at the IRS forms you might see associated with a corporation. The corporation will report their income or losses on IRS Form 1120. Profits are then distributed to the shareholders in form of dividends on IRS Form 1099 dividend statement, as well as W-2 wages. Within the tax form, the IRS Form 1125E may be included. In order to confirm what your borrower's percentage of interest is in a corporation, you may need to review IRS Form 1125E. However, if the total receipts are under $500,000, then the business is not required to complete this form. If that is the case, then you may need to use some alternative methods, such as requesting the articles of incorporation or requesting that the CPA confirm ownership. Your borrower's name will be listed as an owner. The percentage of ownership can be found on this form. The owner's compensation will also be reflected here. Turning to how the income flows through the corporation tax forms. Again, this is very different than the other entities. The net profit or loss are reported on IRS Form 1120. The ownership's compensation may be reported on Form 1125E. The individual's earnings will be reported either as dividends on Schedule B or as W-2 wages on page 1 of the 1040s. Moving on now to the last business entity, the Limited Liability Company, or LLC. This is a hybrid business structure that offers its members protection from personal liability, like a corporation, and yet it is less expensive to form. Generally, the LLC is liable for the debts and losses of the company. Members can include individuals, corporations, other LLCs, and even foreign entities. Membership can include a single member LLC or can include unlimited members. The individual is generally taxed at their individual tax rate. The LLC will file their tax returns depending on how the business was formed. An LLC does not have its own associated IRS forms. Instead, they borrow other entities' tax forms depending on how they have been formed. A single member LLC can file their profit and loss on a Schedule C, a Schedule E, or even on Schedule F. A multi-member LLC will generally use IRS Form 1065 or 1120S, or may even file on an 1120. Take a moment to check your understanding of business structures. Can you match the business entity to the description that applies? Let's go over them together. An LLC is a hybrid business structure. The sole proprietor is an unincorporated business where the owner has unlimited liability. The partnership, the partner may receive guaranteed payments. For the corporation, the business pays the taxes. For an S corporation, the stockholder may receive ordinary income as well as W-2 wages. Now you can see how understanding your self-employed borrower's business can lead to better communication and less confusion when it comes to gathering the required documentation. Knowledge of the structure of your borrower's business will lead to superior efficiencies and execution along your path to achieving a loan approval for your borrower. You want to be known as the mortgage professional who understands the intricacies of the self-employed borrower. Remember that self-employed individuals know a lot of people and can be rich sources of referrals for your business.
Thank you for joining us for Magic Minutes. We hope this brief tutorial has made a difference for you. For more how-to videos, visit mgic.com/training.